Well, good evening, hello, and welcome. It's the witching hour. Greetings and salutations. A warm welcome and hello. I hate to wake you up from pleasant dreams of fairies and sugar plums, but it's your old buddy, Danny Deals. If you could sleep with anybody, I bet you never wished it would be old Danny Deals, your old buddy. But here I am, haunting your dreams, just like you knew I would. When you subscribe to this turd of a channel, apologies to J Money Not a Lurker. I know he is fast asleep. This was sort of an unplanned broadcast because I was trying. This is what I do, guys. I'm not a numbers guy. I'm not an analytics guy. I'm not a facts guy. I'm not a logic guy. I'm not an analysis guy. I'm not any of these things. I am a big picture guy. I'm a puzzle guy. I try to put the pieces together and sort of see where we're going. I obviously my daily predictions have been a complete bust, but guys, it's Un Poco Mas. I'm here late at night. I've been up just toiling away, crunching numbers since about 4 a.m. So it's a nice, I don't know, what is that, about a 20-hour day. Happy, joy. I'm glad I could spend just a little bit more time with you turds. But let me do you the biggest favor in the world and just share my screen. Everybody likes to say that, you turders. Like, let me share my screen. Oh, don't do me any favors, Stock Mo. What are you hawking today? Anyway, guys, I digress. Let me see here. Here we go. I will relegate myself down to my corner. As I'm wont to do. Guys, on the day, of course, yesterday, the 13th, it's, like I said, the witching hour, probably where most of you turds are. It's the 14th already. On the day, the stock was down a dime, 1.34%. The volume continues to get lower and lower, and we can see that illustrated here. 5 days out, 83 million, 76 million, 59 million, 49 million, 41 million. And then it popped, I expect it to pop back up. I'm going to talk to you guys about why I think we have to be patient for 2 to 3 more weeks. And then we're going to see this flip that some of the talking heads are talking about. Not only the normal SoFi shills and, all the guys. Basically, there's a lot of us that like to talk about SoFi. It's a very popular stock. But the good analysis on it, Uncle Bruce and a few other people were able to explain this deal in such a way that it's going to take shares off the table. It's probably not going to end up being extremely dilutive. It saves SoFi a ton of money on the interest or dividends they have to pay out on these preferred shares if they didn't pay them off. So there's so many reasons this is a great deal. And that's one of the things that really struck me about some of the negative notes. There were a couple of, analyst houses, pretty good analysts that came out sort of, in response to this deal. There was really nothing else they were responding to. That included, Barry Switzer, former Dallas Cowboys coach. How about them RSUs? Like at KBW, they didn't even trot out Perito, but, he was basically saying he liked the deal. And then you have Kevin Fuddler at Piper Sandler. He was trimming the lawnmower man, Forrest Hump. He was trimming his price target from 850 to 8 for no apparent reason, and then he raised his 2025 EPS estimate significantly. I think almost 10%. So. Nothing is what it seems. Nothing really adds up when you're talking about these analysts, unless you see it for what it is, and that's that they're trying to control price action to make the most money possible for the market makers, whoever pays them. I mean, think about it, guys. These media outlets, they're all owned. They're not owned by you and I. They're all owned by major corporations, a lot of financial institutions. All these interests align in corporate America. Do you think they're upset about inflation? I mean, corporate America is made out like a bandit on inflation. And these tech companies just stay on a run. I mean, SoFi's been absolutely murdered, but again, I don't think that's going to hold up forever. Why do I say that, guys? There's just too many reasons. We have the volume descending. It's very, very controlled. The algo locks on more and more. The stock was shorted again today. The short volume ratio 55%, but not nearly as high as it was on the 12th at 72%. So it wasn't an extremely, it was kind of a, it's scary to say 55% short volume ratio has become an average day, but you can see there's, if this type of shorting or borrowing results in a 1% loss, there's more buyers than sellers. And that is actually reflected in the chart. But if you take a look at a longer term chart, you see basically the stock making lower highs, but then it pivoted here on November 21st and made its lowest low of sort of the recent past here, about 639. And from then on, it's bounced off this line at 26, 730, but it's continued to fail on pump and dumps, mostly at this upper descending trend line. And every single time over 3 tests, okay, we tested it here end of December, we tested it here end of January, and we tested it here end of February. So the algo is testing this line, seeing what it wants to do approximately once a month. And every single time it does that, as you can see, and that's basically true over here, it goes on this, the algo just sells off the stock, just dumps the stock, shorts the stock. So you see every time it tests this line, 3 huge gaps down. Is that sustainable? No, because the wedge, as they say, if I was Chicken Genius Singapore and I was talking about how Tesla is the only thing I own because I'm so smart and I'm, a young, good-looking guy, and I'm out here with this silly bouffant haircut and this little mustache, and that's the only thing I'm buying, I would just talk about wedges, and that's all I would do, and it wouldn't really make any sense, and everyone would say I'm a genius. And of course you're a genius if Tesla's just shooting up and that's all you own, but there were so many guys like that. I remember this one guy who was, everybody thought was so smart. I think he's like Australian or something, and he was talking about how he owns rental properties, and every time the property increases in value, he would increase his debt on the property and refi, and then take that money and put it into Tesla stock, and he would just maximize his debt on the properties just to buy Tesla stock, and it was give these insane price predictions that just didn't make any sense. I mean, dude, and I'm a Tesla bull. I still believe in Tesla, despite Elon's erratic behavior. I don't really appreciate it, but the guy doesn't really do the engineering there. That's he just doesn't. But it's just this napkin math where they're like, okay, my name's Red Balls. We're going to build 2 to 3 factories a year all through the 2000s. And, by the time 2030 rolls around, we're going to have 60 million robotaxis. It's like, come on, guys. Do you know what regulatory is? Do you know what the government is? Do you know what competitions are? Do you know what taxi drivers unions are? Do you know what power maybe Uber or Lyft have? It's not just a matter of technically being able to do something. Then you have to actually be able to implement it. I mean, people like Kathy Wood think Elon Musk can implement this massive robo-taxi operation nationwide just through force of will or because of his, good looks or winning personality or charm. That's just not how it is. But guys, this is not the Tesla show, obviously. We're talking Sofi Stock, ticker symbol SOFI, Sofi Technologies Incorporated. My name is Danny Deals. For the sleeping and snoozing not a lurker, it is Un Poco Mas, the show where we try to give you just slightly more. But guys, why do I think this stock's going to hang out down for a couple of more weeks? I think they could easily bounce it off this line one more time. They've obviously tested up here 3 times, but I mean, the point of the algo making these very wild swings is basically pumping and dumping, is taking money from retail investors. Smart money is not really, of course, they'll take money from each other, but it's much easier just to take it from us. So they're running these pump and dumps, which are just very emotional roller coasters, and they cause people to behave illogically and, sell the dip and smell the rip, as the title says. So that's what you end up doing, and that's what market makers thrive on because, of course, algos have no emotions, and that's why the majority of the trading is done by computers, and that's why you and I are behind the eight ball from the beginning. That's why we need the information. The only thing we can do is talk with our hands. Have you ever seen an algorithm enunciate to make a point in an affected accent? No. I wish I was the thespian Ben Affleck is my idol, but alas, I am simply not. Anyway, guys, welcome and hello and welcome. I have to monitor the chat myself because Not a Lurker decided he needed to sleep, to work, and take care of his family. Boo-hoo, call me a wambulance. No, guys, of course, that's completely reasonable. Everybody deserves a little shut-eye. Bread Dab was first. Good morning and hello. Colombian Kingpin is here, bringing a couple of kilos to the party. No, of course, I don't know. Just because you're a Kingpin and you're Colombian doesn't mean you could be like a IT guy. You could own an IT company, right? Am I right? Am I right? Or am I right? Tony Notes and team are not buying up shares, Keegan Mullins. They're getting stock-based compensation. They're getting RSUs. I don't think they're buying anything. I didn't have a chance to read those filings. Or those K4s? What the hell do they call those things? I don't know. I'm pretty sure that's stock-based compensation. Do you think Rochelle is buying shares with his own money? Give me a break. Yeah, Form 4, not K4, guys. But yeah, so it's White. He's the president of Galileo. You got Arun Pinto, who's got a great name if you love old hatchback cars or delicious beans. You've got Jeremy Rochelle, who sells all his stock to support the arts or something. You got Chad, you got LaPointe, CLP3, and then you got Tony Notes, my biological father, who promised me Christmas on my 50th B-Day. He would cash in some of those RSUs and we go up fully field with Ben Affleck and have a catch. And by the way, to my good buddy Matt Damon, you can't come because you're just not the writer or actor that Ben Affleck is. And that giant forehead aside, that's the only thing he has in common with the five-head Juliana Bologna. Oh, sorry I'm talking so fast, guys. I'm a little bit tired, a little bit out of sorts. Welcome and hello and welcome. We have David Blanchard getting wrecked. I wouldn't really say the stock's getting wrecked. I think the shorts want to drive it quite a bit lower, but definitely the algo's in charge. Guys, if in 2 to 3 weeks they want this thing to flip, they're going to flip it. I mean, we've been saying, when does it flip? When the smart money wants it to flip. That's not just institutions coming into the stock. They can make money other ways. Think about it. If the deal Noto just made with these senior convertible notes indicates, as many people have said, that they're going to drive the price higher in the next couple of years, they're not necessarily in a hurry to do that right now. In fact, in the next couple of weeks, the put-call ratio, the options tell us that the price is probably not going to go above $8, at least not meaningfully. It might go to $8.10, something like that. But, I can show you turds that, just taking a look at the options here. Obviously, the flow is looking positive right now. But if you go out to the 22nd, put volume is a little bit up. 28, it starts to go down. 5th, it stays down. The 12th, and then it pops way back up here later. So essentially, leading into earnings, the options are leaning more toward the puts, and then after earnings, they sort of even back out, sort of normalize. So I don't know. It's telling me, you can also look at the same thing with the Max Payne, basically 750. 8, and then it starts to go up a little bit. So, the smart money's saying they're going to hold the stock down at this level. And I mean, the definition of a swing turder, they're going to give up in a couple of weeks. Some day traders or weekly traders even faster. So if they can churn the stock down around this 750 mark and there's willing buyers and sellers, I mean, look at what happened here overnight, guys. They were shorting a ton of shares during the day, and then they return them all at night. So up until the session ended, they're shorting 13 million shares, and then they return 20 million shares, so net is down to minus 7 million. So they're not doing that on the open market. They're doing that institution to institution. The whole thing is fixed. I mean, the volume is fixed. It's so neat. Have you ever seen volume step down like this? This whole thing is planned, and these analysts come out of nowhere. I think all of Wall Street knows when big deals like this are happening. I don't think there's any way they can keep the whole thing secret. I mean, it just doesn't seem like it. It seems like these trades, these attacks, these things are absolutely locked and loaded. But just look at how orderly this step down is. I mean, that's just not normal trading behavior. The response to this deal, it was initially completely negative, complete panic. And then within a couple of days, that whole narrative has completely started to shift. Anyway, guys, Anthony Walker, good to see you. Hello and welcome. It is the top of the hour. Princess J is in fact correct. Topper time check, it's 12:06 of the a.m. Out here in beautiful, dark, dreary Los Angeles. It's March 14, just became March 14, 2024. Hope it's a great day wherever you are. Dark Master is here. I started the show. This is the show, believe it or not, Dark Master. This is the actual content. This isn't like some bit or some lead-in. This is the show. So feel free to go watch Stock Mo. He used to teach at the high school level. So I'll have you know. Not many of us can say that. Damn, can Sofi do Stock Mo, turn a money grabber, just 10 videos a day? No, I love Stock Mo. He's great. He wears those unbranded baseball caps. He recommends horrible, meme coins, and he recommends like you buy Neo at the highs. I mean, I'm not saying the guy's a moron, but so many returders are morons. Hitting a little close to home, guys. Okay, Entertainment International is here. Waiting patiently for news on deal done. Institutions close the deal, amount of shares. Yeah, we'll see. Yeah, I think definitely when the quarterly filings come out after Q1, institutional ownership is going to be up near that 50% level. I certainly hope so. Yeah, I'm trying to calm down, Anthony Walker. I really am. LOL. Technical investor Wong just laughing out loud. Topper time check. It is 12 o'clock. Mopar for life. I'm a bow tie man, but you're right on the Topper time check there, Mopar. Columbia Kingpin, who needs to sleep when SoFi is the topic? Yeah, you guys just quit your jobs and drone on YouTube about SoFi. You'll find it doesn't pay anything, but it's very, very satisfying. So when you're living in a cardboard box and just muttering to passersby about SoFi, begging for change, you can tell them Danny Deals sent you. They'll know what you're talking about. House money keeps me in it. Let's go. Oh no, not a lurker. Oh, he woke up. Oh my god. Shit. I was trying to sneak this one past you, J Money. My apologies. But that was funny. I knew you had to sleep. You had to work. He's going to lose his job, lose his house, and it's all because of Unpoco Moss just breeding destruction everywhere I go. But, yeah. Hey, what's up, Cleon? What's up, Mopar? Yeah, J Money, please go back to bed. The show is fucking terrible. It's probably one of the worst shows you've ever been involved with. You don't want to put your name on this. You've come in halfway through a slow-motion train wreck, and you still have time to get out. But anyway, guys, welcome and hello and welcome to my buddy Not a Lurker. Thank you for producing the show. As always, please go back to bed. I just can't be the source of problems. Like this show is not at all worth it. But a couple of things, guys. I know I was like hyperbolic about this Gary J. Gordon guy. Just in all honesty, the guy seems like a super nice guy, like really smart, really engaging. And, if he doesn't like SoFi by the numbers, God bless. I mean, I'm not trying to like spread hate. Anybody can say whatever they want. I just, whether my sense of humor tickles your funny bone or not, I'm just trying to be funny. Like the guy, I saw like his interview with Tanner and everything, and seemed like a really nice, intelligent guy. Just what sort of sticks in my craw, what grinds my gears, what sort of gnaws at me, what haunts a man are not the things he's ordered to do. It's the things he wasn't ordered to do. If you've seen Gran Torino, which is just a tour de force by Clint Eastwood, a great film, great film. And actually not just Clint Eastwood, but the other actors too, the young people, the Hmong, I don't know if they're actually Hmong, but they were portraying Hmong people. And I know I'm saying that wrong, but it's kind of a funny scene where he's saying that wrong in the film. But anyway, this isn't a discussion about Clint Eastwood or Gran Torino or anything like that. Get off my lawn. But what are we talking about? We're talking about Gary Gordon. So he talks about in his first article, essentially it's the growth is bad and they're not in a growth sector. Deposits are shrinking. I'm trying to think to myself, what is the alternative if you're sort of an infant company, a very small company? Obviously, you have to scale to achieve your margin. So what's the alternative to growth? If growth is bad, are you going to just remain small and keep losing money until you eventually go bankrupt? Where his argument completely fails in that respect on the first article is that SoFi's business activities are now profitable. And in his second article, he goes on a lot about the uncategorized expenses and how if you normalize for that, two of the business units still aren't, making a net contribution. But basically, overall, already last quarter, the business is making money on a GAAP net basis. So the fact that they're growing rapidly, but while making money, really negates his argument that, you can't grow at these rates because you're paying too much. It's unsustainable. Not only are they making profit, but they're projecting they're going to make more profit. He's saying don't trust management's numbers. I mean, management is delivering on these numbers. How do you decide who to trust in terms of management? It's like, well, you can never trust them. I wouldn't trust anything they're saying. I mean, number one, these RSUs and stuff that we're seeing these fours for, at least the majority of Anthony Noto's compensation, he only starts to get any of that if the stock reaches $25 a share. I realize he gets, these RSUs that have been issued in the forums today. But the point is that the big bucks do not start to roll in unless the company is very, very successful. They're not just going to be able to pump it to 25, 35, 45 bucks within the next 5 years unless the company's absolutely hitting on all cylinders. But I think Noto's saying if you saw his last interview with like a wink, he's like, well, let's just leave it at 30%. He's like, I think we could do significantly better margins than that, but let's just leave it at 30%. Gary Gordon also talks about like the operational efficiencies aren't there, but he just neglects to mention just completely that the stock is a growth stock that is growing rapidly and has just not achieved any type of scale yet. They've only existed in this form for just a few years. And he makes that point that that's a negative, but you have to go to the flip side and say, well, you have to analyze this thing and value it as a growth stock, not just by the 2023 financials, which is what he does in this article. He goes through, the 2023 financials and he bisects it. He looks at the Technesis write down. He's like, huh? What's this? A write down? It's like he sort of does this babe in the woods routine where he's never seen any of this stuff before. He's like, I was a financial insight. Baloney. You've never seen a write down. This happens with acquisitions. I mean, this happens all the time. It's not like he's never seen this like one-time charge before. He's like, I've never seen this. Watch out for this. It's like, if you get bogged down in the minutia, if you don't look at the right numbers, this is where the FUD lands. This is where the FUD becomes effective. But if you keep your eye on the big picture and look at, is management delivering? Yes, they are. Quarter after quarter. What are our expectations for Q1? I mean, even the Chia Pet raised his EPS estimate from even the Chia Pet raised his EPS estimate from 1 cent to 2 cents in Q1, and he still has, a $3 price target on the stock. So it doesn't make sense. The things don't add up. Kevin Barker's call did not jive with his 2025 EPS estimates. In terms of the price, $8.50 to $8, it's really no big deal. I think it's just a very odd time to come out and say, basically this deal could be a good thing, but we're trimming our target from 850 to 8 based on headwinds. Like there's these terms these guys use all the time. You know, when they get out the FUD, it's like they say headwinds, they say, you know, charge-offs, and sort of this new article, you know, a new call by this is the same Marty Struble who always writes you know, don't jump the gun when he does the you know, the Chia Pet in the last article by KBW. But Buy the Fear, says top analyst Andrew Jeffrey about the SoFi stock. It's famous Wall Street axiom that may always be relevant, will always be relevant. Buy the fear, sell the greed. Given the recent price action of SoFi, shares are down. Tap water, tap water. Sorry, guys, I'm a little bit disheveled. It's like past bedtime out here. Apologies again to Not a Lurker for getting up. That was certainly not my intent. It's famous Wall Street axiom anyway. However, looking at SoFi's current situation, Truist Andrew Jeffrey, a 5-star analyst rated in the top 2% of the street stock pros, is not worried. He recommends aforementioned old play. We see opportunity in others' fear, says Jeffrey. Our view is that the central debate on SoFi is around credit and potential read-through of capitalization. We contend SoFi remains well capitalized to convert TX provide an additional 200 basis point buffer. Jeffrey's discussions with investors have revolved around assessing the reasonableness of SoFi's life of loan loss estimates. The analyst believes this is a point of high leverage, particularly due to the company's held-for-sale accounting method, which involves quarterly marking of its loan portfolio. Q4 2023, SoFi's assumption included a 4.8% annual charge-off rate, roughly translating to a 7.2% rate over the loan. This represents year-over-year increase of 20 basis points, indicating a trend of normalizing credit. Okay, so this is what SoFi's basically planning for. I think it's a little bit conservative. Jeffrey thinks the bears are skeptical SoFi can stay in its 7 to 8% life of loan loss range, although nearly impossible to substantiate either side of this argument until unless management provides visibility into static pool performance. Our conversations with SoFi provide confidence that loan performance is tracking to expectations. And again, this is what I said, you know, when people were talking a lot about this last year, was how is it to SoFi's advantage to overstate the value of these loans? How does that do Noto and management any good? They're only going to get a short-term pump out of that, a couple quarters, maybe a year. They don't get any stock options for that. They don't get any stock options for pumping the stock to $20 in 2025. By 2026, 2027, when they're trying to get the stock $25, $35, $45, we're talking 5 years out to get these stock options, you're going to know what happened to these loans. These are not 30-year mortgages. These are personal loans. You're going to know in just a couple years how these things are doing. So why is management going to be dishonest about this? And management is not even marking these loans. These loans are marked by basically an independent third party using all these variables. I know management plays a role in that, but they're not, you know, the only, it's not like they're in the back room cooking the books or something. It's to management's benefit to be accurate or to be too conservative. And that's exactly how SoFi management always is, in my opinion. And it sounds like Andrew Jeffrey with Truist, a 5-star analyst who just reiterated his $14 buy rating, you know, agrees with me. So regardless, the 5-star analyst goes on to say, we think investors will gain credit insight in the next few months as loan growth slows and recent vintages season. So yeah, as newer loans, you know, get a little bit of age to them, they'll know how those loans are doing. So all told, Jeffries rates SoFi a buy with his $14 price target, implies shares are on course for 90% return over the coming year. And to look at his track record, so let's go ahead and do that. He is a 5-star analyst. He's ranked number 100 out of almost 9,000 analysts and number 307 out of 37,000 some odd experts. So there you go, whatever you think that's worth. So we've taken a look at the chart. We've taken a look at, just take a look at where the short interest is and how that's going to catch up with the shares that have been borrowed. You know, last few days we've seen, you know, borrowing 13 million, 15 million, 8 million, just day after day after day. Utilization is up to 81%, up 74% over the last 3 months. Let's just take a look over the last 2 weeks, guys. Utilization over the last 2 weeks is up 59%, from 50% to 80%. Cost to borrow is still low. There's still plenty of shares out there, but shares on loan have gone up 58%, from 147 million to 232 million in the last 2 weeks. Short interest is still saying it's only up 7%. That's just not going to jive when the new data comes out at the end of the month. That data lags by about 2 weeks, the official, I guess, NASDAQ data or official interchange data. But the official reports, guys, the thing you'll notice with the short interest is basically the shares available can have gotten a lot tighter than you ever see them. I mean, there's always 10 million shares available. Always. I mean, cost to borrow is still pretty low in fairness, but now for the last couple of days, there's been like 2 million shares, sometimes down to 700,000 shares available. That's something you just don't see on the Sofi stock ever. If you know exactly what's happening here, the mechanics of it, please let me know down in the comments, which are located down near my crotch, it would seem, when you point that way. Anyway, hey, why am I awake? I can't tell you, Rifleman. Let's go. What's going on, guys? Haha. Go to sleep, not a lurker. I'm feeling so guilty. By the time earnings come, there's going to be news of rate cuts. Going to be, yeah, I mean, that's what I'm saying. There's going to be a confluence events in a few weeks that are going to push this thing way up. Remember, guys, the quarter is over in like 2 weeks. So in 6 weeks, we have another ER dropping. And I think the top line number is going to get a big boost from this NBA deal. There's a lot of things that just have not been priced in my opinion. Let's take a look at our tile here. We have Little Larry. This is from Big Lebowski. Do you see what happens, Larry? When I talk about sell the dip, smell the rip, that's what the market makers wants you to do. A lot of people want you to believe that the bulls and the shorts, institutions are fighting each other. I kind of make hay of that sometimes. But it might be in their best interest just to sort of churn this at the bottom, let the shorts cover. Remember, some of the shorts are working for the same companies as some of the longs ultimately. A lot of short longs here. You know, Goldman Sachs has big short long position, as do many others. So basically, what's good for bulls and what's good for shorts? Bulls who are coming into the stock now, they both want low prices. Because remember, these bulls have years to push this price up to take advantage of the terms of that convertible note. So this isn't something they have to do tomorrow or next week or next month. You know, it could be next year. It could be the year after that. So it doesn't mean they're going to push the stock up to 14 or something immediately. They could wash out retail because they want your shares. They want your shares and they want them as cheap as possible. Are they just going to make money off the shares, you know, they're going to get converting this note? No. If they're going to spend money and push the stock up or just push the stock up in general, they're going to go long, you know, 8 ways from Sunday. They're going to make money not one way, they're going to make money 5 ways. So if they know they're going to push the stock up, they're going to be buying up all the shares they can buy at these levels. I mean, and you didn't see Aunt Kathy buying today, but you've seen Aunt Kathy buying the stock heavily for the last week. This has now become a serious position, I think probably in the low 30s in the overall ARK portfolio. So, you know, this is becoming a bigger position than many companies that get a lot of publicity with ARK. And I kind of wanted to talk about, you know, that sort of elusive hybrid valuation, that respect that we essentially, you know, never get from the market. And why don't we get any respect from the market? Well, this just a bank narrative that ignores the growth, that makes, you know, growing deposits. That's what I'm like, Gary Gordon, don't you get it? I mean, he's like, hey, all these deposits are not a good thing because you have to find something to do with them. SoFi's making loans and the spread has been really good, even with the charge-off. So that's a very profitable business activity. Why would you not want to scale that? Yes, most growth stocks, most companies growing this fast are just incinerating money. Not so at SoFi. SoFi is growing very rapidly and very steadily while making money and increasing those profits and moving closer to their goals in terms of ultimate profit margins, both gross and net. And remember, guys, you should remember what Noto said about the 30% margins. Like, it could be better than that, but let's stick with that. I mean, this is another point, just total disingenuous point. Is like, you'd think with the, the scary guy, you'd think with their no brick and mortar, they'd have better margins. It's like, they have not scaled yet. You're comparing these guys to companies that have been doing this for 100 plus years, and they've only been doing this for 5 years. It's just completely unreasonable argument, completely disingenuous, lazy, and turd-like, in my opinion. Welcome and hello, hello and welcome. Welcome and hello. I do hate you guys, but thank you for staying up anyway. I'm going to go really quickly over my stupid notes here, and then I'm going to get you guys out of here. I know you guys got to go to bed. So we have a triangle, guys. We have a perfect storm. It's coming together. You have very strong fundamentals. That includes growth, that includes margins, that includes all these businesses, that includes the diversification, not getting all their profits and the revenues out of lending, getting more profits out of technology, getting more profits out of financial services. You combine those strong fundamentals with aggressive shorting into that strength, which just doesn't make a lot of sense to me. But if they have to start to cover, it's going to put a lot of upward price pressure on the stock. And obviously, I've talked about shorting until I'm completely blue in the face. So I don't need to go on anymore about that. You guys are probably completely sick of hearing it. And then the third leg for that is catalysts. Well, they just didn't get any pop out of the gaap net profit. No, it was shorted heavily. Oh, they just didn't get any pop out of the NBA deal. Well, it's been shorted the last couple of months. I mean, I just showed you the numbers. The short's been, not only dramatically increasing the last 3 months, but particularly the last month, the last 2 weeks. The borrowing has just been going absolutely ham. So what's been happening with Ortex is the borrowing's been going way up, and then when they issue the official numbers, those come way up to meet the borrowing. So we could see the short interest increase by 50 million shares when that data comes out in a couple weeks. And then on top of that, you're going to see a lot of shares being taken off the market by the recent deal, according to the brain trusts and, the guys who really know what they're talking about, like Uncle Bruce. I mean, one of the things it was nice of J Money Not a Lurker to send me a Uncle Bruce made some comments about me, sort of like, he's like, Danny Deals, he's not bad. He's got a little, he's like, he doesn't want to say, hey, this guy's just a big fat moron who doesn't know anything about the markets. No, I one of that 19-minute video he did, that thing was worth thousands of dollars in education, and it's just the plain English. One of the things you notice when people are explaining things is like their comfort level and command of the subject matter. And when I saw like even SoFi Weekly, who have very smart guys, I think the only person with a true command of it was Roy. And then the other two guys were struggling through the material because they just didn't know it that well. They're not professionals. They're not. When Uncle Bruce was talking about the deal, it was like preschool for him. It was like kindergarten. He understood it so well. It was like second nature, and he was able to put it into extremely plain English that a guy like me, who's just a layperson, was able to very, very clearly understand. And that's when you know somebody really understands something, when it's like second nature to them, when it just rolls off their tongue very, very smoothly, and it's clear they understand it really in depth. They're not struggling with the material. It's like when you see a guitarist, and he's good, but he's like looking down at his fingers when he's changing chords and different things, and then you see another guy who's, like an Eddie Van Halen or Stevie Ray Vaughan or whatever, just one of these virtuosos who they're just in the music and it's just completely second nature, and that's what I think, like these complex Wall Street deals is just above my pay grade. So if that's second nature to you and you can put it into plain English to help others, help me out. So thanks for that, the kindness and the shout out. And he's like, I think he's like, I just don't go on any other shows. It's like Major Leagues, Uncle Bruce, Rookie Ball, Danny Deals, Un Poco Mas. But we're trying to build up. We're like a snowball. We roll over you, we roll downhill like an avalanche, and we sort of gather you up, like it or not. Let's see, guys. Who do we got? Palantir CEO. Yeah, that was a great clip. Everybody's been playing that one. If you guys haven't heard it, just look up Carp. He was talking about how basically short sellers dragging down great American companies just so they can buy more coke and like pay off their coke dealers. It was he was pissed. He's fired up. Like, the guy's very, very passionate. He's very patriotic, and he cares not only about his own company, but about other companies, about, the country in general. So I think a pretty interesting guy. I do like Palantir, the company. I do think it's a little bit overvalued. I'm not a buyer of the stock right now, but that's neither here nor there. So let's see. I can't read my own writing. So we had sort of that triangle: fundamentals, catalysts, and shorts. The catalysts were the good ER, not only the NBA deal, not only the bancorp deal, not only the top 5 financial institution in a major proof of concept, but there's others. I can't remember them all. So what else are we talking about here, guys? Sorry, I got to go over my notes. My eyes are extremely tired. I am extremely tired. Yeah, I want to talk about the hybrid valuation and why it's important that Cathie Wood's buying the stock. Obviously, she buys disruptors. She sees something in the stock that these other analysts just don't see, and I think her aggressive purchasing of the stock at these levels reflects that. And she was even buying, up higher into the eights. So we had all those catalysts. I think right now, for the next couple of weeks, everyone who matters, and possibly significantly longer, wants the stock down. Shorts want the stock down. Bears always want the stock down, but I think long-term bulls want the stock down to drive weak returders out as low as possible and accumulate shares for a big move, big run up whenever they intend to do that. So, I mean, what is this push down designed to do? You have to believe at some point they're going to flip and go long, the market makers, and drive this thing up and make a ton of money. They're not going to push SoFi into bankruptcy. I don't think they're going to push SoFi into a reverse split. I don't think that's the intent. I think it's just to wring out returders with pump and dump after pump and dump, big gaps down, scare the hell out of people, basically make a lot of money collecting premium on options. You see, guys, I mean, if you look at the options, stupid returders, and maybe the stock will go up. I don't know. I'm not saying it won't, but returders just opened up a ton of calls for this Friday at 750. So let's go back. Yeah, this is it. So you see the volume come in here, guys. 14,000 contracts representing 1.4 million shares at $7.50. So that premium, mostly smart money's collecting, it just gives them every incentive to keep the stock around 760 tops. So I'd be surprised if the stock goes up much given that options activity. It just doesn't look that good to me, but your mileage may vary on that one. Anyway, guys, let me continue on with my notes. How's everybody doing? Welcome and hello and well. Don't sub and like, whatever you do. I turned off share loaning. Yes, I also turned off share loaning. I think that's a good idea. You can do it on the chat too. Yeah, sorry guys. Sorry to wake you up, but I needed to get this broadcast done so I could sleep. So you guys are, my guinea pigs. Sorry about that. If you want to tune out and go to bed, I forgive you. Don't forget, guys, May 28th, T+1. Uncle Bruce left me feeling bullish as hell, and he's a smart dude. Yeah, me as well. I don't know enough to know if it's 100% true, but sounded like he knew what he was talking about. Three Stooges. Okay. Curly, who's the other ones? Hybrid Duncan, yuck. Let's see, Katie Wentworth, buy Palantir. It's only, Palantir is, I agree, it's only like 5%. Yeah, you're right. Let's welcome Sesame Street. I'm not buying anymore. Yeah, I'm not buying right now because I just bought some. Don't really have any more, don't need any more shares, guys. But let me get through my notes. I appreciate you guys. Welcome and hello, and appreciate you guys watching. Let me see if I have anything else to say. Growth is bad. Everyone who matters wants us down. Basically, this is what I look at this, guys. This is a period they're creating maximum FUD. They're creating maximum fear. You have analysts coming out. You have KBW rating the stock twice this quarter with negative notes. You have negative notes coming out based on this senior convertible note deal when the analysts are actually positive on the deal. And there's no other changes really, except for, I would say, a little bit hotter inflation, but that's not even really what they're talking about. I mean, yes, some of them are talking about defaults, but they've basically gone off of that. They're talking about these buzzwords that want to make it sound like SoFi is in some type of, it's a bad business model. They don't know if they're going to be able to compete. They talk about competition. They talk about the industry. The fact is, the financial services sector is absolutely massive, and SoFi is rapidly taking market share, and they're going to have really good profit margins, and they're going to spin off a ton of free cash, and market makers know it, and market makers want to own this company, and they want your shares. That's my theory. And shorts, I think, while they've made money, I still don't think their position is great right now. They've driven this thing down by shorting a ton more shares. And I think a lot of returders and Aunt Kathy and many other Aunt Kathys out there are scooping them, are buying up these shares, much to their chagrin. And it's kind of ruining their plan, I think. I think they want to take it a lot lower. I don't think their ultimate goal here is to hover this thing around 750. They're not really making out like bandits, and a lot of you smart guys are selling options. I mean, a lot of the turd army actually sells these options and collects this premium, so you're on the right side of this deal. God bless. Anyway, guys, that's really all I had for this evening. This is a period of maximum fear. What is Truist saying? What do all the smartest people say? Buy the fear. When everyone's fearful, when all the sheep are running the other way and selling and just jumping off a cliff, just remain calm. Analyze the situation. Do your own research. Is there anything wrong with SoFi? Absolutely not. SoFi is growing extremely rapidly. It hasn't had any of those weak quarters. We had 34% growth last year. With this NBA deal, I don't think growth is going to be 20. I think growth is going to be 30. I think we're going to have really good membership growth. I think we're going to have more IPOs. I think we're going to have more of these private equity things come online. I think investors who want to just invest in interesting and different products, but do it long term, who aren't sort of the daily people, I think SoFi really attracts those kind of people. Busy professionals. Now, you and I, the degenerates, the grinders, the grifters, the turds, we might have time to sit around and watch the stock. Some of us do, some of us don't. But guys, I know it is getting extremely late. I appreciate you all joining me. Remember what Andrew Jeffrey said. He recommends you buy the fear. Everyone is creating maximum fear. The media, the analysts, the institutions, the shorts. They obviously want you to sell the dip and smell the rip. That's their whole goal. That's how they make money. All you have to do is scoop them, just like Aunt Kathy. Be like Mike. Be like Kathy. Scoop the shorts. That's, this isn't financial advice, but just buy low, sell high. It's not super complicated. You don't have to be a genius. And if you can make money selling covered calls and all that type of thing, more power to you. But you really don't need to be a genius. You just have to not respond emotionally. And when they've obviously gapped the stock down 3 times, guys. Look at this. What stocks trade like this? It looks like, their clinical trial just failed 3 times. If you look at this chart, guys, sorry about that. If you look at this chart, look at these gaps down. Based on what? This is mechanics. This is traders. No stocks trade like this. Look at these peaks. Look at these slopes. This isn't organic buying and selling. This has been a trading stock, but it's going to break out of that, and it's going to do it when long institutions, when the real smart money wants it to. That's why I'm happy to have people like Vanguard at the helm. And that's why I'm happy to see ARK taking a huge position. They believe in this company not as a bank, but as a disruptor of the financial industry. They believe in Galileo. It looks like one of these top 5 financial institutions believes in Galileo. And what is Q1 going to look like if they're able to put some news? I'm not saying they'll be able to announce anything, but if they're able to talk about these contracts advancing. This was the fulcrum here. This was the wedge, whatever you want to call it. This was the balancing point, November 21st. And I believe it's up from there, but it's very, very tenuous. They're fighting tooth and nail. Up from there can be a relative term. Yeah, a Mopar for life is constipated, needs some real food. Jack in the Box might be open. Try a couple of those 99-cent tacos. Those should get you moving there, turd. Tired of eating top ramen. We're all top ramen. It's hard to estimate the advertisement growth of SoFi, like how does NBA, Taylor Swift add bottom line. It's very true. We're not going to know probably at least for a year how that deal is playing out. It took, I think the SoFi Stadium deal was a good deal, but it's really hard to say because we don't know exactly what it is adding and not adding. Champion of excuses. Good point there, champion. Not a lurker's hungry. Not a lurker, let's go. Hey, not a lurker, thanks a lot Princess J, thank you so much for putting up with me. Cutie, sorry to interrupt your sleep as well. Everybody has to make sacrifices in order to deal with me because I'm a big turd, and that's just kind of the way it is. But anyway, guys, do not sub and like whatever you do. Hopefully, you have a good rest of your evening. Try to get back to sleep. I recommend a little sleepy time tea. It doesn't taste very good, and it doesn't really put you to sleep. Actually, there are no benefits to sleepy time tea. Just one of those wives' tales that your parents sold you on. It's like, when you get sick, have some 7-Up and saltine crackers. Like, hey, Mom, can you take me to the doctor? Saltine crackers. Anyway, guys, welcome and hello and goodbye and get some sleep, guys. I hate you guys. Have a good night. Peace. I'm out of here.